Hey, everybody. Thank you for joining us here on another Monday, Crazy Monday. My name is Gary Etienne with Making Real Estate Fun Again. We're trying to do, of course, every Sunday we have open house lives. Every Monday we have different content. I know this times are crazy. I was just talking to my guest before he comes up about how, I was almost walking into a riot last week and, not even know what was going on. So we always got to be conscious of what we're doing, what's going on. I think for my part, I'm trying to give financial education, financial awareness for us agents, for us people, and to grow, not just physically. We have to grow financially and wealth in our minds and really educate ourselves, right? So that was my biggest takeaway from this week, is try to educate ourselves and from homeschooling the kids and taking lessons. So today is about financial freedom, financial education. My guest is Marcel. He's a good friend of mine. He handles all my stuff and my family, my sister. I send them everywhere to every family member I have. So for no further ado, let's bring Marcel up. We'll go over some financial content, what advice to give, what he should do, what we should do. And not just stocks, because I think stocks are very volatile, up and down. I like long-term things, long-term goals, things I could look for and have a little bit more security in my money. But with no further ado, let's get Marcel up here. How you doing, my friend? Let me just take your way. Can't hear you, my buddy. Your mic is on mute. Sorry, guys. Bear with me while I get his. Marcel. All right, guys. Bear with me while Marcel gets his mic going. It says mic isn't connected. No. Can anybody? Yeah. Go ahead. Go out and come back in. I think I heard your lips. I'm a lip reader. But while Marcel does that, it's like I said, it's been a crazy 5-6 couple of days, right? With what's going on, and really for me, it's the turning point was really just looking at my son, which is 17, and educating him on a regular basis on what to do, what not to do. But it was definitely. 1 second. I'm sorry, Marcel.
How funny is that? Our first live together, and the mic doesn't work, and we did a sound check too. Man, you can never rehearse this stuff, right?
Go figure, right?
Oh man, that's great. That's
Marcel.
Great.
Tell me a little bit about, I know you for a long time, but tell everybody else, your background and everything else that you've been.
Yeah. Thanks. First of all, I'd like to greet everybody. I can't see you out in virtual world, but I want to put the good vibe out there and say hello and give you a big virtual hug. We're in crazy times right now, so I hope everybody is doing well. You and your family are safe first and foremost. So I'm Marcel. I've actually been in financial services for the last 20 years. I started going on my 21st year pretty much, because I started when I was 19. And I got licensed in the industry, both in investments and insurance. And I've been pretty much just doing the same thing for the last 20 years, helping many families across the tri-state and now across the country, helping them devise plans, helping make sure that their family's protected, making sure that they have a strategy for the long term, making sure that they are building assets and considering things like taxation. So the cornerstones of solid financial planning. So that's what I've been focused on.
Yeah, yeah. And speaking of taxation, that's the game. It's the name of the game, right? Avoid taxes at all costs, right?
Yes.
Try to pay
Yes.
as less taxes as we can pay. When we're making these moves, real estate moves, whether buying, selling. Try to avoid all this taxation and have long term uh, fortune, right? So we
Yeah.
can leave down to our kids.
Yeah, absolutely. I think we what a lot of I'm not a CPA or your tax professional per se, but being in financial services, you do deal with a lot of tax products that can help you build strategies to pay less taxes. A lot of people know about like what's called tax deferral, where you grow money without paying taxes, so the money, like more money goes helping you towards compounding and building something stronger. But few people understand what's called tax advantage, and that's like what's actually on the distribution phase. So
Yeah,
when you're pulling the money out, how can you create a vehicle where or create a retirement for yourself where it's tax free? And because most of the things are getting taxed. So that's what we educate clients on. Sometimes you might have somebody that's a very savvy investor. They might be doing very well with their own portfolio, but then one of the things, the key things that they didn't plan for was when they use the money, they're going to be taxed, or when
yeah,
if they make, so that's where they hit a roadblock. And that could be it could take a big portion of somebody's
yeah,
net worth, without them even realizing, like when the time they need it the most, they actually end up having to pay a lot of taxes for it.
yeah, yeah. I think especially with in the agent sense as the realtors, we get big chunks at certain times, right? And then we just have like, all right, what are we doing next with it, with our money? After, I always just tell my agents save 33.5% for taxes. Cut that out of your commission from the get. As soon as you get that part is going to the tax guy. But we should be allocating some more money to these investments, to these
Yeah.
different wheels,
I
right?
I think so, and I know how it is. I mean, I have family. I have two family members that are both in real estate, and they do well, and but I also know the behind the scenes as well, like
Yeah,
so kind of like kind of the pains that they go through, and every
yeah,
business has its ups and downs, and so it's tough because when you're in real estate or any sales type profession, sometimes you have things where it's flowing and you're
fluctuate.
making a ton of money, and
Yeah,
then sometimes it's like, okay, it's a little bit flat, and or a lot flat. It depends, but
yeah,
you have to plan for that. And I think I that's not even like financial planning, but that's just one time I received like a who's the guy that wrote Eat That Frog? Brian
oh,
Tracy. Was it Brian
yes,
Tracy? Right. So Brian Tracy. One time I went to go do a live training with Brian Tracy in the city, and that was one of the things that out of that 7 hour talk, because he was doing a full day, that's one of the things that kind of stood in my mind, and I kind of use till this day, and help clients understand is that especially when you're if you're a business owner, if you're in sales, because being in sales is like whether
yeah,
you're doing real estate, financial services, etc. It's an independent contract.
yeah,
You're building your own thing, and you have to be able to find a way to pay yourself first. That's
yeah,
one of the key concepts in planning, is like a lot of times we have so many things that we're paying, whether it's mortgages and business and whatever it is,
yeah.
cars, etc. And then we pay everybody, but then the last person we pay
Never
is
get paid.
like,
Yeah,
yeah, we're
ourselves.
like, okay, I got to pay myself, but then by the time you try to pay yourself, it's
Nothing
already
left.
too late, right?
Yeah,
There's nothing left, right? So that always stood out to me, and that's where we try to, when we help clients, we try to really go according to their budget, because everybody's different, and the issue that people, like a lot of people are getting advice from the, I don't want to say names, but there's certain type of names online and on social media, etc. Big names, right? Or you see them
yeah,
on TV, so they're getting their advice from these type of folks. But there sometimes, like, one shoe doesn't fit everybody, right?
yeah,
It's
yeah,
definitely different strokes for different folks, and everybody has a different situation. They have
yeah,
a different way of living, different lifestyle,
yeah.
and also they have different goals. So
Goals. Yeah,
that's, yeah, that's where I think it makes a lot of sense to really know your
customize,
client,
right?
right? Like yeah, exactly, like know your client, know where they, like, get to know them better. So we spend a lot of time in that area where we kind of really want to just learn about our client first, focus on the education part, and then through there we can help. So instead of me saying I'm a financial planner, advisor, whatever, those are all titles and different. But really, I'm more of a financial guidance counselor, right? And helping people navigate through the financial industry and help figure out which product is going to fit their needs, right? So. Mhm.
So I know we wanted to go give a little taste of some financial education, some breaking down stuff. Like I said, I always want to give content, some things that they could, some food for thought, you know.
Yep. Mm-hmm.
So I'm gonna let you take over with that, and then anybody have questions, please put in the comments. His contact information is there as well. But while we have him live, definitely, if you have any questions, I'll read it out to him towards the end.
Definitely. Gary, quick thing, because I'm new to the StreamYard, which is pretty awesome. The quick thing is, like, I have my PowerPoint up, just one slide I want to show. Yes. But do I have to hit share?
Yes.
Okay,
please.
So let me get back to that. Give me 1 sec. That's so
hit
funny.
Share, and then it'll ask you to share your screen, and you can say okay.
Perfect. So it's just like Zoom.
Similar.
Yeah, similar. Yeah. So friendly heads up. So it's giving me a heads up. I'm hitting share. You can see my screen.
Give me 1 second.
Okay, hit share. Okay, perfect. So I'm gonna go there, and then let me try to just get to this PowerPoint here. My timeline. Okay, perfect. All right, cool. So let me focus on this first for a moment. So I don't want to bore you with a bunch of stuff, but maybe if I could just give you some fundamentals of what we teach is what we talk about is something called the 4 cornerstones of building a solid financial foundation. So whenever you're trying to save and invest for your future, you want to make sure that your financial game plan incorporates as many of these pillars as possible. So the first area, what we talk to people about is protection. What that means is that, like, here I am working. I got married a few years ago, starting a family, that kind of stuff. And, what we do at the end of the day is, yes, it's for us, but it's really for our family, right? So whatever we're building, whether we're building a real estate portfolio, or we're building a stock portfolio or an investment portfolio, et cetera, whatever we're building, we focus very much on those things because we want to see them accumulate. We want to see them grow. But a lot of times we leave off the protection part. And what I mean by that is that making sure that whatever it is that you're building and that you're focused on, you want to make sure that you have a protection towards it. So meaning that, God forbid, if something happens to me, does my family have instant access to those funds? And do they have, does that product or that investment have any sort of liquidity? So protection is a strong aspect of building a solid financial foundation, which many people overlook, right? The second cornerstone of building a solid financial foundation is growth, right? So where can I put my money where it could grow? Where can I get a better rate of return? Why is it important to get your money to grow so that one day you don't have to work as hard or potentially at all? That's the end game, right? So
that's inflation, right?
Exactly. So we want to make sure that we're earning more than inflation, because inflation is two. Let's say if inflation is 2% and we're only getting 1 or 2% on our portfolio, then we're really breaking it. Like if we leave our money in the bank, let's say, for example, the bank gives us, they don't really give us 1%, but let's just say they give us 1%. But if inflation's 2%, then technically we're losing money every year, right? Mm-hmm. So in order, there's actually, in order to beat inflation, you actually need a 5% return plus to start winning the money game. And the reason for that is because you have to factor in inflation and taxation. So 5+ is where you really start making money. But most people, they have their, let's say, like, a lot of people actually figured out how to get growth, especially over the last 10 years where the market has done so well. But then it raises the next question is, where's the safety in that investment? Because a lot of people were not prepared for what happened just this past with this crisis, where portfolios lost an average of about 30%. You're looking March into April, and yes, it's recovered for the most part, not all of it, but we've seen a lot of recovery. So, but then people are wondering, how come my portfolio is not back to the same? Like, how come I don't have the same amount account balance that I had before? And the reason for that is because the more you lose, the more you have to gain to get back to even. So, for example, if you lose 30% in the market, then you actually need 60% to recover a 30% loss. So you need double to recover a loss. So that's why it's important that a financial plan has it needs protection for the family, growth for so you can allow your money to work for you, safety because you want to protect those gains. So a lot of people were not prepared for what happened. And in fact, I just recently read an article where it was talking about how retirees today, like the people that were going to retire this year, that drawback in the market actually set them back 5 to 7 years for them being able to retire, right? So safety is a very important aspect of building a solid financial plan. And the last concept is tax advantages. So meaning, or the last pillar is tax advantage. So meaning, how can I allow my money to grow in an area where I'm not paying taxes on it every year? So that's, for example, tax deferral. You could do that with an IRA, or if your job offers a 401k, you could do that there. But then what about on the distribution phase? How can I pull money out free from taxes as well?
Yeah.
Right? Like when you need it the most, that's when you that's when you need that advantage, right? Because now, like, and that if you notice, like, people retiring now, yes, we know Social Security is not a lot of money, but it still helps for the people that are retiring now. Will we get it when we retire? We don't know, right? Like, we don't have a crystal ball, but a lot of people don't plan for that. A lot of advisors say it's not going to be there, right? Or a lot of experts say it's not going to be there, but right now, the people that are retiring, and let's say they built the money in a traditional IRA or in a 401k, so now they're using that money. That money becomes a part of their income tax. So if they're only getting Social Security, then they actually they don't get taxed. So if you're only living off of Social Security, which is a tough way to live, but anyway, so then it doesn't get taxed. But if you're getting other income with your Social Security, now your Social Security gets taxed. And then it has certain limits. For example, like I think it's like under 24,000. If you're getting, like, let's say you get 5,000 from your IRA, you take out every year, and then you're 24, but now your Social Security tax, and now you could get taxed on your Social Security. And if it's like over 34,000, then your Social Security aspect will get taxed up to 85%. Right. So I was in a situation with a client, like you were asking me earlier about like some challenges, and that was a challenge with a client where it was a new client, but she was like a nurse. She's about in her 60s. She's thinking whether or not she should take Social Security, and she's still working hard out there. And she's like, she's getting a pension. But then I said, because you're getting a pension and then you have this 401k money, and now if you take Social Security, your Social Security is going to get taxed up to 85%. So she's like, I'm trapped. How do I win? Right? If I would have known this 20 years ago, then I wouldn't have accumulated money in this area. I would have done it in a tax advantage manner. You follow what I'm saying? So that's so what we help clients understand and how to do is how can they create what's called a tax-free retirement for themselves. I'm going to stop sharing if that's okay.
Yeah, we're good.
Okay. All right, perfect.
So all these tax advantage different ways, are they really how's the growth in them on average?
That's a good question. Well,
I know you can't give me a number, but like today, tell me the last person,
well, okay, that's a good question, but it's also like, for example, the growth, you could get tax advantage and have 1% growth. You follow what I'm saying? So the product that you use, let's say if you have a tax advantage strategy, so you're using a product that gives tax advantages, where your money grows, not pay tax, you can pull the money out free from tax. But if it's in a money market account, then you're not going to get any growth. You follow what I'm saying? So there are products that allow you to, now what's becoming more popular is something along the lines of index-based products. So you have products that mirror the market index, but then so you could scale. It's not a guarantee, but you could scale an average of like 7-8% with some index-based products, and then some of them are provided by insurance companies. So basically, insurance companies are able to give you guarantees that if the market goes negative, then it will either absorb a percentage of a negative loss, or it will give you some sort of minimum guarantee, right?
So
Without getting like too specific
basically,
about the
so it's like
company and
a
product.
cap of your losses, right? You can't go.
Yeah, exactly. There's products out there that, for example, you could get up to a certain amount. So we have products that you could give you up to 15% of the market indexes, and if the market goes negative, then they'll give you a minimum 0.75 return on any negative market, and that product has averaged about 7.5% over the last 20 years, right?
Okay.
Yeah.
7.5%. So it's above that 5% you're talking about, right?
Yeah, with tax advantages.
Yeah.
Yeah.
Okay.
And then you have other type of products that are more geared towards like they have specific retirement products that can actually move into, let's say if you have if you have an IRA or if you have a 401k and you want to get that to work a little bit better for you. You want the upside of the market, but then you don't want to take so much loss or have so much at risk. So there's products out there that can absorb up to a certain percentage of negative losses. Like we have products that if the market goes negative, it will absorb up to a 10% loss or even up to a 30% loss, depending on the portfolio that the client chooses. Then it determines the cap. Obviously, the higher the risk, the higher the reward, and vice versa. So like the one that has the negative 30, it could give you up to like a positive 9%. The one that has the negative 10 could give you like a little above 15%. Yeah.
So
Depending on
those are
this.
like for what you're saying, the ones that lost 30% wouldn't have to gain 60 to be back in the green.
Exactly.
Right?
Good, very good point. So basically, like I have clients in those scenarios where they're getting closer to retirement. They didn't want any high cost product where they're paying too much fees, but they still want to participate in the market, and they know they're not going to make the return that they're looking for just sitting in a money market or a bank account.
Yeah.
So we use these products to be able to give them the performance of the market when it performs, but then on that negative downside, they didn't lose any money. And in fact, right now with that recovery, they're up a little bit, so that's the positive part about that. Definitely.
So on the agent front, I know a lot of the people viewing are my fellow agents out there.
Sure.
They're getting these bulks of money, big checks, and paying themselves first. Should they be looking more towards like, what are they looking for to really contribute on a yearly basis?
Yeah, I mean, rule of thumb is 10%, right? 10% of your income and that goes back to the richest man in Babylon, right?
Yeah.
So that's a rule of thumb, and that concept is doesn't change. The more you could do, obviously, the better. If you could get to 50% of your income, then more power to you, right? But rule of thumb is take 10% of what you make and put it into something where it could go to work for you. And there isn't no set one product. Like we have to look at it in a different way, where you're thinking short term, intermediate, and then long term, right? So it's kind of divvying up your money in that way, so that diversifying it in that way, because most people, they end up hitting a roadblock if they commit to something that is like a 10-year, 20-year time frame, but then they need money now. And that's why a lot of these products get bad raps, because they weren't properly prepared. A lot of these financial products, they're like, like a executive at my firm, she said, they're like a knife, right? Like a knife could be used to cut a nice meal, some veggies or meat, whatever it is, and then or it could be used to kill. So a lot of damage could be done, right? And that's how you got to look at these financial products. They could be very sensitive, so it takes some time to plan, to understand them, and then plan them according to fit the needs of that individual. So having short term, midterm, and long term, and that's the strategy that we have in mind for clients when we're doing planning for them.
So in same essence, right? When people now, so many people have unfortunately passed away and are getting houses unexpectedly and selling them and getting big bulks of cash, depending on their long-term, short-term goals, that's when you really determine what they should be doing with that money, right?
Exactly. Yeah, definitely. And that's an interesting scenario because they're never used to having a lot
Yeah,
of money, right? So it's so all of a sudden now they got a couple of 100,000, and if it's not planned correctly, it's going to
yeah,
get eaten up very,
quick,
very
very
fast. And
quickly.
yeah, and then another thing you have to like I've been in scenarios like that where I have like a young person, working, not making a whole lot of money, just working a normal job, and then all of a sudden he got a huge inheritance, and it's like, okay, we got to make sure that we have some for now,
Yeah.
some for later, and then some locked up for way later, where it doesn't have that much accessibility because you're going to need this later. So that's very important.
Now, it also is it was it way later is being a trust fund later? Is that what you're talking about? Way later?
No,
Or
I mean, I think like long term is it's 10, 15, depending on how long, right? But you're looking at 10 years plus, right? 15 years
okay,
plus. That's a long term. Intermediate's like now 1 to 3 years, right? Like 1 to 3 years. Like short term is 1 to 3 years. Intermediate, 5 to 10 year range, and then that 10 plus years. That's what you're looking at long term.
okay.
Yeah.
Yes, I thank you for your time, my friend.
Sure.
Like I said,
Thanks for
I
having me.
no, of course, definitely. I wanted to because a lot of people have been asking me. A lot of people I referred you to as well. Just been reaching out to me, and then I was like, you know what? Let me get them to know you the way I know you, and we forever give different scenarios. I always give him 100 different crazy scenarios, and he figures stuff out for me. So I do thank you for your time always.
Definitely, my
And
brother.
even
God bless.
his wife is a tax. She's a tax professional, so between him and his wife, just like my wife, are always hustling, always working. So definitely reach out to Marcel.
I appreciate
He has
that.
all facets of the game. But
Definitely.
I thank you guys. Contact Marcel if you guys need any more information. His numbers was scrolling on the bottom. I'll put it in the comments as well. And Marcel, thank you. Be well, my friend.
My man. God bless. Thanks for having me. And
No
bye,
doubt.
everybody. Again, big virtual hug over the internet. God bless, man. Definitely.
Bye.
All right. Cheers.